I'm Rob Van Raphorst. Welcome to MBA Now. With us today is Steve Hoke of Finastra. Steve, thanks so much for being here.
Thanks, Rob. It's great to be here with you.
So Steve, what are the latest trends you're seeing in the industry right now, and what feedback are you getting from your bank clients?
Yeah, there are some interesting things going on. Certainly, I think most of the MBA participants would know that the refi market has had a huge spike and is definitely tapering off now. And what we're seeing is more traditional 30-year fixed rate mortgage market with primary purchase going on right now. So definitely slowdown in the refi market. You know, there are other things going on that are interesting, like the impact of weather on the real estate market and how lenders are looking at and evaluating risk and allocating risk in their portfolio. There's also interesting competition from non-traditional lenders. And also we're seeing a little bit more of an uptick in terms of mortgage brokers being a channel that consumers are using to help find the best mortgage deals. So lots going on right now.
How can banks then, I guess, become more efficient and capture market share away from online mortgage lenders?
Well, in order to capture it away from online lenders, they have to be in market with their own technology tools, right? They're not going to be able to take somebody who's searching online and bring them offline. You've got to be able to be just as present and just as efficient online as some of the non-traditional online lenders. So that means that you've got to up your game in your technology. You've got to have the basics like an online mortgage application, and then you really have to offer some other tools that help enhance the experience: loan status, notifications, text messaging, information on rates, and education tools to really help borrowers get comfortable with that buying process. So there's a lot that they can do, a lot that will help them compete with those non-traditional lenders.
What does an open platform or ecosystem mean?
Yeah, this is a really exciting area for a lot of mortgage technology companies. There are a lot of standards like MISMO that mortgage technologies can take advantage of to start to integrate a lot of technology together, something that's been historically a challenge for mortgage lenders. When they have all these disparate systems, the act of trying to get them to integrate and talk to one another has been a real challenge, as well as talk with different providers in the space. And so for us, we have a platform called fusionfabric.cloud, and we've exposed our mortgage platform out into the market. So it allows third-party systems like point of sale systems to integrate into our platforms. It allows us to integrate with mortgage vendors, flood, title, appraisal, 4506C vendors. And so it really allows us to assemble an application workflow for a client who wants to tailor that application experience and that workflow for their institution. They use this title vendor, they use this point of sale vendor, this e-close provider, and we can stitch all that together using open integration and really streamline the workflow process for a bank.
So how important are data and insights for lenders to analyze?
Yeah, data is a really interesting area too, and how banks evolve and use data. It's historically been really hard to get to, and even if you get to it, a lot of times it's rear view mirror looking. What has already happened. Where it starts to get really interesting is, can we surface the data in a really digestible way, and can we start to tell you about what might happen? And so we have a product called Fusion Mortgage Bot Data Insights. And it sits on top of our mortgage loan origination system or our point of sale platform. And it's looking at and collecting all this data. And it allows a lender to look at their application data, their loan data, and understand what's going to happen, look at underwriting decisions. If they tweak their portfolio, how might their risk change or their ability to accept different types of loans, and also see how they're performing against the global population of mortgage bot users, so they get a reference point. Geez, my approval rate looks like this. How do I compare to everybody else? Or I'm attracting a lot of younger borrowers, but maybe not so many older borrowers. How does that compare to the entire population of mortgage bot users? So they start to get insights into where their business is going, and they get a reference point for comparing themselves against a lot of other mortgage bot users, so they can really start to see how they're performing. So that's really a compelling way to use the data.
So there's so much choice right now in the mortgage market, and a lot of consumers moving away from sort of traditional providers. How important is the customer experience with mortgages?
I think, one of our mantras at Finastra is that the pandemic has brought the future forward. And that means that when we used to talk about a lot of digital experiences coming in the out years, all that has been brought forward. And so consumers are used to and expecting a great user experience to apply for a mortgage online. They're expecting a great user experience to keep up to date on the mortgage application. Where is it? Where is my closing? When is a closing happening? Can I e-sign my disclosures? And can I e-close that mortgage? And so all that is becoming the norm for the customer experience because of what we've collectively experienced with the pandemic and the need to kind of retreat and do all things digitally. So it's increasingly important that having a great user experience is table stakes. And if you're not there, you really need to jump right in pretty quickly.
So customers often sort of struggle with their mortgage lender, and they don't really necessarily understand the entire process and how things move through it. Are we educating borrowers about the entire process? And if not, what role does technology play in it?
Yeah, technology plays a huge part in it. And the answer is, I think there's a lot more that we can do. The number one Google search related to home lending is simply, how much house can I afford? And so answering that one simple basic question with some basic calculator tools and some guidance on how consumers should be thinking about how they allocate their budget to a house and what that means for the type of house that they can afford is really an easy first step in terms of educating borrowers. I think they're really hungry for that kind of information. And tools like MortgageBot, our clients can put up custom FAQs to help tailor their messaging for their customer base, are really important tools to help educate consumers about the buying process, what to expect and what that journey looks like. And then similarly, transparency and information about mortgage rates, putting that rate information online, making it accessible, easy to understand is really important. So there's a lot that technology can do, and it's clear from kind of the way that customers are going out searching and what they're searching for is telling a story that customers need more education.
So what digital services could present an opportunity for banks and or credit unions to gain market share?
Yeah, we touched on a couple of them, but let me just go a little deeper. The first one is a really strong application experience. The tools to help them understand what the products and rates are, an application experience that's easy and tailored for the type of mortgage that they need, and then having the tools to be able to see the mortgage process, to be able to e-sign, e-close, and really understand and see that full life cycle to manage expectations throughout the entire process. The old way of having to have consumers call in and say, what is the status of my mortgage or what are your rates, are just not tenable in today's environment. They really need to have those digital tools. So they've got to have the full end-to-end digital experience from education, application, status to closing. Really has to be a complete digital experience. And you have to have a thoughtful user experience around that. So getting access to the information, having the ability to ask questions or get your question answered throughout that process and to be able to self-serve is really critical.
So lenders seem to be turning to brokers in higher volumes to support their mortgage needs. Do you think that this trend will continue? And how could banks and credit unions take advantage?
Yeah, brokers are definitely something. I think we mentioned that at the top. That is a trend that we're seeing more of is leverage in that broker channel. And I think that the answer to why is pretty simple and straightforward, because they represent a way to get a best rate, because the broker is seeing across a number of different lenders and presenting a really compelling rate, or at least that's the hope for the consumer. I think what banks and credit unions can do to respond is make sure that their rates are updated and current on their website. Oftentimes they don't do a great job, or it's call to get a rate quote or things like that. And that's not kind of the experience that customers want online. They want to be able to go online. They want to be able to see rates. Our MortgageBot product has something called rate search, where they can put in parameters and they can be notified when rates hit a certain threshold. So giving access to that information and then really clearly articulating what fees to expect on the mortgage. So you can see what closing fees are, the GFE, all those things really help a customer have confidence in the transparency of these are the costs associated with having a mortgage. And I think if they're doing those things proactively, and with the right education around it, that's a way that they can compete with the broker channel.
So how does technology help banks attract and retain younger generation?
Yeah, that next generation of home buyer, and that's really what we're seeing as those purchases, that millennial generation really starting to come in mass. And so, of course, we've talked a lot about the technology tools, but I think the education for that first-time home buyer, whether it's old or young, is really important to help them understand what that process looks like. And so if you have tools that are around the education, explaining the journey, and that you can make it comfortable for that person, because you're not walking into a branch and having somebody explain the process to you so much anymore. Customers coming to you digitally, you still have to have the tools to explain that. So looking at it, understanding, explaining is great. And then using tools like data insights to see into your customer base and get a sense for who is applying. Maybe an institution isn't seeing a lot of that younger generation. So then how do you start to tailor your marketing, do outbound outreach through social media to start to draw engagement with younger borrowers is also really important. So educate, make it simple, and then really make sure you understand who are you attracting, who's coming in, and if you have a gap in your portfolio, what are you doing to drive awareness with your brand in some of the channels where younger borrowers tend to be.
Great. Steve, so thanks so much for stopping by and talking about Finastra and the stuff you're doing there. We really appreciate it.
Thanks, Rob. It was fun. Appreciate it.